Hello everyone, we are here again to talk about the housing market here in the Phoenix area. We finally have some news and some updates that you should know about our housing market. I haven't made one of these in about 3 or 4 months now, and that's because, well, not much has changed in our housing market until now. We are starting to see a shift in our housing market, which we'll get into why and what is exactly happening. So we're going to get into a full update for you to decide if, well, now's a good time for you to be buying or selling a home here in the greater Phoenix area. My name is Trevor Bragg. I'm a realtor here in the area. If you want help buying and selling a home, would love to help you out. Just reach out to me, my email and number on the screen. So about our housing market, let's talk a little bit about where we've been recently and where we are right now. So recently, and really for 2024, we saw appreciation go up 4.6%. So the average home price went up 4.6% here in the Phoenix area compared to 4.8% in 2023. So really on a yearly basis, almost identical in terms of appreciation from 2023 to 2024, which is good to know because, well, the years before that, 22, 21, and 20 were kind of wild years. We saw crazy jumps and crazy downs in 2022 particularly. So to see a more normal market going up the rate of inflation now, 5% a year, is honestly, to me, a good sign for everyone. Sellers want to see it. Buyers want to see a calmer market. I'm sure you want to see prices go down if you're a buyer, but at the end of the day, it's better for our overall economy if home prices are going steady with inflation. If we see a crash happening in the market, that tends to be a really bad sign for the total American economy, which you probably don't really want, even though sure, everyone wants to get a cheap house. So we saw in 2024 to have a fairly calm market for the most part. And if you look at a median sale price graph, you see that. You see a little bit ebbs and flows, but you don't see any big jumps in our median sale price, up 20,000 for the year here in Phoenix, all the way up to 450,000. And when you look at it, you can see that median sale price basically didn't change for the last 9 months. We saw a little bit up, a little bit down, but it was 450 and it kind of went down to 440, back all the way up to 450. So really not much change in median sale price overall. And the reason our market stayed fairly consistent was that interest rates were fairly consistent. And when you saw prices go down a little bit, it was probably because interest rates went up a little bit. And when you saw prices come back up, rates went back down just slightly. But really, we were in about 0.5% for almost the entire year, really mid sixes to high sixes, all the way right around 7%. Interest rates hovered for almost the entire year. So we didn't see much change in that. And this was a little bit of a surprise to see the results. So most people thought if we were at high sixes interest rates right around 7%, that we would probably see a decline in our housing market, that was too high of a rate, it was too expensive, people couldn't afford it. And that's just not the case. We ended up seeing that actually that was almost a good interest rate to keep home prices under control while not having home prices drop. And so that almost ended up working out to be the right interest rate, I guess you could say. Now, sure, prices are still historically extremely high and it is very inexpensive compared to, say, 5 years ago to buy a house. But in terms of going with the rate of inflation, not having the market explode and not having the market crash, that rate actually ended up being the right fix, which really that's what the Fed wants. That might not be what you want, but that's what they're trying to do, is they're trying to keep home prices under control in rate with inflation. Now, the issue was we had 2 years where inflation was out of control, and that's why we are where we are today. So anyways, we saw rates basically stay the same, and it showed that in at least the Phoenix area, if rates were in the mid sixes to high sixes, we're probably going to have a steady flow, a steady increase in home prices, about 0.5% or so each month, which tends to be in line with the rest of history. Now let's look at what happened in January. So we're at the beginning of February. We get to see the stats of what just happened in January, and you can see that homes closed went down about 800 less homes closed in January compared to December, which that's not the best of signs, but that's also fairly standard, right? December, there's not a lot of people buying or selling a home just about anywhere because that's around the holidays, right? You don't want to be moving and packing up stuff right around Christmas time when family's coming in or you're leaving for the holidays. So you don't see as many transactions. 800 is a little bit bigger of a jump than normal. We're usually closer to 500, but I wouldn't say it's anything too concerning, especially since we saw that the median sale price went up 2,000 in January, which that is more of a surprise. We usually almost always see January numbers come in flat compared to December, or usually a little bit lower, actually, maybe $5,000 less on average compared to December to January. But actually we saw a slight increase in that, which even comes as a little bit more of a surprise because actually active homes went up, which again is standard. January tends to be a higher active month because not as many people went under contract in December, so those homes carried over to January. It did go up about 1,000, which isn't too drastic, but to see home sales go down active homes go up and prices go up, that kind of tended to be a surprise. That's just usually not the equation that we're seeing. And we also saw the days on market stayed just about flat at 76 days on market. And so overall, this January was a little bit unique, but nothing too drastic in any direction really. But the positive sign is that actually homes closed. This was the highest homes closed in 3 years, so higher than 24 and 23 in January in particular by a decent amount, by about 400 or 500 homes. And so that's a good sign for our overall market that more transactions are happening. Now we shift over to February and see what's going on right now. So all these numbers, like when you see active homes or if you see median sale price is for the entire month of January. The active is where it was on January 1st. February 1st, we are now at 23,000 homes active. And again, that's not that crazy historically, but that is a 3,000 jump compared to January, about 15% increase in inventory from January to February here in the Phoenix area. And that kind of is a surprise, and that is a big jump. So we'll have to see what kind of plays out from that. Now, this is a little bit cyclical in what tends to happen in our housing market, because the best time to list a home is mid-January to early February here in the Phoenix area. If you're looking for the absolute best, it's not like a huge peak and valley, but for the most part, we have a lot of people coming from out of town February, March, and April for spring training and for our good weather here, and so that tends to be the best time to hit the biggest pool of buyers. And so we usually see more transactions happen and the median sale price go up maybe 5,000 or 10,000 in February and March. So you do see usually a little bit of an uptick in active homes, but that is a big jump. 3,000 is a fairly large jump in active homes. So we'll have to see how many homes actually close to see if those buyers fill that demand or not. But 23,000, in my opinion, that's really where we should have been the last 4 years. I mean, that's where our market should have been. That's how many active homes should be in the market. That would be a normal market. But we do have high interest rates making this not a normal market, and we had a very irregular market for the past 4 or 5 years now. And so 23,000 homes is going to look high compared to our history. If you scroll down, it's going to take a while to actually get to where we saw that many homes active. We're going to have to go quite a ways back to see that many homes active. So that tells me we may be shifting more into a buyer's market here if we're seeing that many homes active. Now again, February, March might counteract that because it's our busier months, but if we stay at that 23,000 and keep going higher all the way through April, I'll definitely expect that our home prices start to drop here in Phoenix. Now, the surprise in all this, I kind of mentioned this, is that our median sale price actually went up in January, and it's been continuing to go up really since June. We've seen a slight increase all the way up to 450, and yet our days on market is also going up. Usually those two things don't happen. You don't see prices go up and days on market go up. You usually see days on market fairly flat or maybe even drop if we're in a seller's market where prices are going up. And this active number also going up by 3,000, I think both of these are kind of psychological things that are happening in the market in sellers' minds. And this is kind of the takeaway I want you to see of what may be shifting in our housing market. I actually think that this tends to be a bullish sign on the housing market from a seller's perspective, maybe not a buyer's, but I think sellers willing to list their home and that active inventory going up is actually a sign that they are more confident in the market. And so the reason is this: sellers, about 80% of them end up rebuying a home, right? So 20%, maybe someone passed away and that's the home, maybe it was an investment or second home, but 80% of primary residence sellers rebuy a home. And so for them to sell, they have to be bullish enough to be wanting to buy a home next. At least 4 out of 5 of them have to be willing to do that. And so more people listing their home tells me that there are more people that are wanting to buy a home. And the reason that we saw active inventory be so low for really the last 4 years now, and especially over COVID and 21, is that sellers didn't want to sell. They had too good of an interest rates. They ended up refinancing and getting such a good rate, and all the buyers that bought in 2020 and in 2021, there was no way they were selling in 22 or 23 because they had such a good rate that there was no chance that they were going to sell. And so people willing to list their home on the market and either give up a great interest rate or give up a huge equity position means that they're likely bullish and they want to actually end up buying. And now the reason I'm saying that it's actually bullish and not that these are panic sellers or people thinking that this is all-time highs, it's about to crash, is that prices are going up and the days on market is going up. And so how does that make sense? The reason is that typically if a seller was distressed or they were selling because they think this is all-time highs, they're probably going to take a slight discount on what the home's worth, right? All the homes in their neighborhood sold for $450. They might be willing to go for $440 just because they want to make sure it's sold. They're not worried about the crash happening. And also, they'd probably be willing to accept an offer quicker, right? An offer comes in lower, they're willing to negotiate to make that work quicker. So if days on market is going up, that means that's not actually happening. That means they're not pricing low, and that means they're not also willing to take a discount on their price. They're willing to wait. And that tells me that a lot of sellers in the market right now are not distressed. And at the end of the day, what causes prices to go down? It's distressed sellers. It's people who need to sell because they lost a job, because they're getting foreclosed on, because of something bad happened financially to them, that they're not able to keep making these payments. And so they're willing to take a discount on the price to get out of the home and get their money and not worry about getting foreclosed on. And so if that was happening, days on market would drop because people would be willing to accept lower offers faster, or at a minimum, prices would be going down. One of those two would be happening if we had distressed sellers. And since neither of them are happening, I think that there are a lot of sellers in the market, and I'm seeing this also in the workplace, sellers that would like to sell, but they want to get the price that they think their home is worth. They want to get the appraised value or possibly even over the appraised value, and they're not really willing to take a discount. They're not in any need to sell, but if they can get the price they're looking for, they're willing to sell and end up buying another place. They're willing to cash out their equity and maybe even give up a great interest rate to go find a better home that fits them and their family. And so they're willing to wait a little bit longer, and hence why we see the days on market go up. Now, the flip side of why I think this is also possible, and you might be saying, well, if days on market is high, isn't every buyer going to come in low? And the answer is yes. Normally, if you see a home that's been on the market for 100 days, you're going to think that's probably overpriced. We should come in low. And for the most part, that is still very standard. That's happening here in Phoenix. The difference is that most of these homes being bought, we actually saw a huge increase in the luxury side of Phoenix. Those transactions are happening more often. About double the amount of homes over $1 million sold in this year's January compared to last year's January. And over 600,000 also saw about a 10% increase from 600,000 to $1 million. So that's a pretty good increase in homes selling in those price ranges, because those are the higher price range homes. And surprisingly, the homes under 500,000 actually saw a dip in the amount of transactions happening. So usually the easiest homes to sell, right? The starter homes at 400,000 here in Phoenix, those are usually the quickest to sell. Actually, those are not selling nearly as much because there's not as many people that qualify. And so what's happening is usually you see a lot more negotiations on first-time buyers. And that's because those $5,000 to $10,000 differences make a big deal to them. The credits that they can get, the price difference to get their payment where they need to be, those make a really big factor into first-time buyers, and you tend to see that negotiate down in price. More concessions happen at that lower price range. But not a lot of people can qualify as a first-time buyer because of 7% interest rates. And so we're getting a lot of repeat buyers, people that are selling their home, they have $300,000 in equity, and they're going to buy a $700,000 place. Fairly common thing I'm seeing here in Phoenix. And what happens with those buyers, the very well-qualified buyers, those that can qualify for the higher price ranges, they don't care as much as negotiating little numbers like, $5,000 to $10,000 on a $700,000 purchase isn't that much. And if they go out and they look at 10 homes, right, there's a lot of homes for sale, they look at 10 homes with their family and they found their favorite one, they might be willing to give them list price because they found the perfect home. They're well qualified. They know they're not going to care that much about losing, $10,000, $20,000 on the purchase price because they found the perfect home for their family. And so it tends to be that those well qualified buyers, when they come in contact with stubborn sellers, they're more willing to give in. Now, of course, if they can negotiate, and my clients, if we're able to negotiate with that seller and they're not a stubborn seller that says list price or nothing, which most sellers will negotiate at a minimum, at least a little bit off the price, especially for a well qualified buyer. But let's just say you run into the worst seller, they're extremely stubborn, you and your family are well qualified for this home, it's the perfect one, they might just be willing to give in. Whereas a first-time buyer would not be willing to, right? If they couldn't get the concessions they needed, if they couldn't get the price that they needed to qualify, they just aren't going to go with the home. They're willing to find a less perfect home that fits their budget to make things work. And so I think that is also playing a factor into why prices aren't dropping yet. We have sellers that aren't in a need to sell, and we have buyers that are so well qualified that they don't care as much about the small differences in numbers. And we're also seeing not a lot of first-time buyers get into the market. So actually some of the harder homes to sell right right now in Phoenix are those $350,000 to $400,000 homes where we're targeting first-time buyers. Well, it's really hard to qualify as a first-time buyer right now. So what's happening right now in the market for you if you were to buy or sell? So if you were to sell, as you're seeing, you could probably still get right around appraised value. We're seeing prices go up with the rate of inflation fairly smoothly here. And now this may change if our active inventory continues to jump up. But I am expecting that, the surge of February and March to happen and us to kind of bring that number back down to normal. But as a seller, expect you could probably get close to list price on your home right now. Probably not at list price. I'd say most sellers are getting maybe 3% below list price. So if you got a $400,000 home, you're maybe getting $385,000, $390,000 for that home after some negotiations. On the buy side, it is very dependent on days on market, and it's also very dependent on the seller's needs and how badly they want to sell, right? So of course, if you come into that stubborn seller that says I'm getting 400 or nothing, well, that's what you have to deal with. But I'd say most sellers, especially when they've hit above 60 days on the market, there's definitely some room for negotiation, especially if they haven't dropped price yet. So if you see a $500,000 house, it's been on for 80 days, they haven't dropped price at all, it definitely makes a lot of sense as a buyer to maybe come in at 470 and start the negotiations there. You might not get 470, you might end up at 480 after some negotiation with the seller, but overall you definitely have some room to negotiate with sellers in this market. It's not anything drastic. Don't expect to get 10% off the sales price, but as long as the home is near the appraised value, you're probably getting just slightly under that for the most part. Sellers naturally list their home above where it's appraised at, so even if the median sale price is $452, the median list price is probably $465, just because sellers always kind of overassume what their home is truly worth and where they're going to list at. And so, yes, there is some negotiating happening. It's nothing drastic. Like I said, maybe you're getting $10,000 to $15,000 off a standard home here in Phoenix, but a lot of sellers are not in distress. And at the end of the day, if you're expecting to get $50,000, $100,000 off a list price, it's because you're finding a distressed seller. And in Phoenix, we're just not seeing a lot of those. We have a lot of people with great equity positions, obviously a lot of people with great interest rate positions, so they're not in a need to sell. Some of them are only selling if they get the certain price they want, and that tends to be what I'm seeing here in the markets. And so sellers, like I said, right now is a pretty good time to sell. February and March tends to be some of our busier seasons here in the Phoenix area, especially in our different 55 plus communities, and good locations for second homes like Scottsdale tend to be popular right now. But buyers also, like I said, if you can come across a seller that's actually getting into that distress scenario, which is rare, and of course if you're looking for the perfect home for your family, you probably can't sort through the hundreds of homes and pick the one distressed seller, because it's probably not the one house you want. But definitely if you see a home with higher days on market, expect to do some negotiating and expect to get that price down at least a little bit to what you're looking for. So that's the housing market update I have for you guys. There's definitely some things you should be tracking here in February. I think homes closed is going to be the biggest one. If we see that number get to 5,500 and up, I'd say we're on a good track to see our homes closed and our median sale price be in track with inflation, which is kind of what most people are rooting for. But if you see that homes closed be under 5,000, I think that's when I'd expect to see prices probably will be coming down in February and March if we're not getting the demand we need, especially with this active inventory going higher. So something to be tracking is where homes closed go. At the end of the day, homes closed and active inventory tend to have a direct effect on median sale price. So we'll see if that's the case in February. Thanks so much for watching. If you want any help buying or selling a place here in the Phoenix area, I'd love to help you out. I am a local realtor. I love working with people that are relocating from out of state, or buyers that are in state right now that maybe don't know one alley from the other here in the Phoenix area. So love to help you out. I am a realtor. Thanks so much for watching, and stay tuned for more videos about living in Phoenix.